Good morning, everyone. I'm Alex from BCR, and this is your market update for Tuesday, the 30th of September. So, the US dollar index, what's moving the dollar? The US dollar index was trading around 97.95 on Monday, but came under pressure due to fears of a possible US government shutdown. So, traders are watching key economic data this week, like the ISM manufacturing and services PMIs. Most importantly, Friday's non-farm payroll report. So previous job reports have shown a slowdown. So another weak number could trigger more dollar selling. In contrast, strong data may boost the dollar and reduce the chances of a Fed rate cut. So according to the CME Fed Watch tool, there's about a 90% chance of a 25 basis point rate cut, though that number dipped slightly last week. On the technical side, the dollar's momentum is slowing near key resistance levels, with 99.00 being that critical barrier. If it fails to break higher, it could fall back to test support near 97.70 or even lower. So, crude oil, supply concerns versus resistance levels. So, the oil markets were volatile last week, with WTI dropping over 3% to $63, even after briefly hitting 66.19. So this drop was mainly due to OPEC signaling more production and the restart of the Kurdish oil exports. Despite geopolitical risks like Russia-Ukraine conflict, the market is still showing resilience. WTI futures rose 4.5% for the week. However, strong resistance is building around the 65.61 to 66.49 mark. Unless prices break above that, gains might be capped. On the downside, if oil drops below 63, it could retest the 61 level. Overall, the market remains caught between supply concerns and a possible production increases. Traders are keeping a close eye on inventory data and the upcoming OPEC meetings. So gold's having a strong run, breaking above the $3,800 mark for the first time, hitting $3,834 per ounce. It's nearly a 2% gain. So this surge is supported by steady US inflation data and growing confidence that the Fed will keep cutting rates. A weaker US dollar and global uncertainties, including the risk of a government shutdown, are also fueling demand for this safe haven asset. Technically, gold remains bullish. The RSI is overbought, however, but is still showing some strong signs of momentum. If prices stay above the 3,800 level, the next big resistance is the all-time high of 3,850. So a clean break above that could push gold all the way towards 3,900. However, if there is a price drop below 3,765, it may signal a short-term pullback. The Aussie dollar extended its gains on Monday, benefiting from a weaker US dollar and stronger than expected local inflation data. These signs of resilience have reduced market expectations for any near-term interest rate cuts from the RBA. As it stands, the probability of a rate cut at the next meeting is 6.5%. The country's budget deficit is also narrower than expected. This adds obviously to the Aussie dollar's strength. On the charts, the Aussie USD pair is trading at 65.60, but sentiment remains slightly bearish. Support lies between 65.26 and 65.00, but if those levels break, we could see further dip to the downside. On the flip side, however, a move above 65.95 could shift momentum and open the door to 66.60. Thanks for watching, and I hope that you found this helpful.